Good afternoon, everybody, and welcome to this latest weekly market recap for the week ending Wednesday, October 15th, 2025. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com. It's certainly a pleasure to be back with all of you again this week. It has been quite a trying week. We've seen volatility spike. We had a little bit more war of words between the U.S. and China, kind of rekindling that trade war. The tariffs, we've seen the VIX spike up into the 20s, which we hadn't seen for a while. And we saw probably the biggest sell-off that we had seen since back in early April. So it's been kind of rough here over the last week. And we're going to go through all of that with you in just a minute. But I do want to just say nothing's really changed. As far as I'm concerned, I believe the long-term picture remains perfectly bullish. I see the market going higher. I just think in the short term, this increased volatility certainly enables the bears a little bit more in the near term, and I wouldn't be surprised to see a little bit more back and forth action. So let's take a look at what happened over the course of last week, and we'll start with the major indices, where you can see over the last week, the Russell 2000 has gained 1.5%, but the other 5 indices are all lower. So we're seeing that shift. We're seeing that rotation into the small caps. I think there was a lot of manipulation that took place at the end of last week with the volatility spiking, a lot of money rotating into smaller companies. And I think this is just the start of it. I think once Wall Street has kind of shifted what it wants to shift, I think this is a group, the small cap group I'm talking about, that could be off to the races. The IWM, which finished somewhere around the 250 mark, I've told members I believe we could see 300 by the end of the year, and I wouldn't be surprised to see 350 by the end of the first quarter of next year. I think that it's going to be a massive rally in small caps. Been talking about it, and we're starting to see some of the rotation in terms of just the performance in the major indices. Moving on to the sectors. Over the course of the last week, only 3 groups actually gained ground, and all 3 were defensive areas, which kind of makes sense. When you go through a lot of volatility, you will see some shifting into more defensive areas. I think that was pretty normal. That's what we saw over the course of the last week. You can see that the S&P 500, which lost 1.22%, the underperformers in terms of sectors were materials, healthcare, industrials, technology, of course, that's a big one, and energy. Energy can't get out of its own way. And technology, which had been leading the rally throughout most of since the bottom back in April, taking a little bit of a break this past week, and that's okay. We'd like to see technology go up every day, but the fact is it's not going to happen. We'll be watching to make sure there are no major breakdowns, but simply going sideways, seeing a little bit of selling from time to time really is healthy for the market, and it's healthy for that area of the market. All right, moving on to the charts. S&P 500, there is that big, ugly red candle from last Friday where we saw selling all day long. I was actually expecting to see red futures on Monday and some additional selling, but the market actually surprised me. We saw a nice rebound. S&P came back. We're now just in a trading range, and overall, haven't really lost any more ground since that Friday sell-off. In fact, we've come back up a little bit. I think all is still well now. It's not completely well, and I'll show you what I mean when we take a look at the VIX here on this next chart. So here is the S&P 500 still going up. There's that down day from Friday, and then the slight recovery that we've seen so far this week. But here is the VIX. And what you need to know about the VIX is that when the market sells off, the VIX moves up. And once the VIX gets up into the 20s, sometimes things, the selling can escalate a bit. So I'm still, a little bit on pins and needles. Loved seeing the small caps recover and go back to new all-time highs. I think that's good. I think that's showing obviously some leadership on the part of small caps, and I think that's going to continue, but doesn't mean that it isn't going to come without maybe a little bit of pain in some other areas. The VIX did finish on Wednesday at 2064. Anytime the VIX is above 20, I think you have to be a little bit cautious. And if it starts to accelerate and you see 24, 25, 27, 30 on the VIX, that is normally when selling really begins to escalate in the market. So you've got to be careful. Now, having said that, if we go back and we look at these minor sell-offs that we had back in May and again in June, and then again right at the end of July, all three of those, even though the selling really didn't materialize into much, that period of weakness saw the VIX move above 20. Every one of those, all three of those, saw the VIX move up and close above 20. And the market was able to shake it off, keep moving up to higher prices. And that was a peak that we saw on the VIX. Now, this time may be different. I don't know. One thing that was different was that as we were going higher back at the end of September into early October, notice the VIX was rising. And what happened as a result was we saw positive correlation between the two. The problem there is that the volatility index normally goes up because of nervousness as a result of the market selling off. In this case, volatility index was moving up while the market was moving up. And we saw this positive correlation. Now, this doesn't happen too often, but when it does happen, what it tells me, the story that it tells me, is that the market's getting nervous and it's not going to handle bad news well. We literally sent out a warning to our members last Thursday and said, this is the highest that we've ever seen, this positive correlation. And it's telling us that we could be in for some short-term trouble. Even mentioned to members that I was building cash because I was worried about the short term, not the long term. The short term being a little bit dicier and maybe actually seeing some selling. That was on Thursday. Friday, the next day, we saw the biggest selling that we had seen since that April low. So these signals do matter. And we are now retreating back on that correlation. We're now back into inverse correlation, which is more normal, but we haven't peaked yet, or we're not sure we've peaked on that volatility index. So I'd really like to see that volatility index move back down below 17. So when we get up into that 17 to 20 range on the way up, it makes me nervous. Once we get above 20, it really starts to make me nervous. And then until we can move back down below that 17 to 20 range, I think we need to be a little bit on guard and just be careful, be very nimble as traders. Long term, folks in it for the long term, if you're looking out a year, 2 years, 5 years, whatever, this will pass. I believe we go back to all-time highs in the fourth quarter. I think we're going to go significantly higher still. So I am not worried at all from a longer term perspective. But in the short term, yes, I am a little bit nervous. Anytime, like I said, the VIX is above 20, you have to be careful because we don't know it's going to top in the low 20s like it did the last 3 times. Sometimes we get moves up into the mid upper 20s. Sometimes we'll go into the 30s with pullbacks in the market. So we do need to be a little bit cautious with that. Moving on to the NASDAQ 100. We saw very similar sell-off last Friday, similar rebound, but also similar consolidation, no breakout. So we've got kind of sideways action. We're consolidating. Hopefully that's all it is just some consolidation. Then we break out, things return to normal, the VIX comes back down. That, I would say, is probably the more likely course, but I don't rule out the possibility that this could accelerate and extend maybe to a 20-week EMA test. So this is the daily chart. Let me pull up the weekly chart, and you can see that we're still comfortably above the 20-week moving average. 20-week moving average on the NASDAQ 100 is at 23,362, and right now we're at 24,745. So we're about 1,400 points above that 20-day EMA. which is a little bit more than would be a little bit more than a 5% pullback, maybe a 6% pullback to get us back down to that 20-week moving average. So I think that, there's still a reasonable chance that it could morph into that. I do believe if we get down there, though, it's going to set up for a nice entry opportunity into many stocks as we hit the most bullish period of the year historically, which starts on October 27th at the close. Unfortunately, the worst week of the year historically falls just prior to that. So we still have some historical weakness that we're still facing over the next couple of weeks. Once we get beyond that, we then move into the most bullish period of the year. Historically, it runs from October 27th to January 18th. And I suspect that, like history, I believe fourth quarter of 2025 is going to end strong. I think we'll go into 2026 either at or near all-time highs, probably at 7,000, maybe even higher on the S&P 500. So we'll just take it a day at a time. But right now, in the very near term, and I'm just talking about, maybe the next week or two, I think that the market is subject perhaps to a little bit more of this volatility and the movement back and forth. Small caps. Here is your breakout to a new all-time high. So even with all the volatility, S&P unable to break out, NASDAQ unable to break out, small caps had no problems breaking out. We broke out on Tuesday. We extended that move on Wednesday. Looks to me like this group wants to go higher. Like I said earlier, I think the IWM is going to 300 by the end of the year. I think there's a very good chance. We're sitting at 250 right now. That would be another 20% move. And I think it could be another 15 or 20% move in the first quarter of next year. I would not be surprised. I think money is going to continue to rotate. I think we get 2 more rate cuts this year. And I believe that we are likely to get more rate cuts in 2026. And as we talk more and more about rate cuts, lower rates, higher valuations, lower rates, rising earnings, rising valuations, rising multiples. I think that's what we're looking at. And I think the first group that's going to get the majority of that benefit is going to be the small cap area. Transports still struggling. We did rally the last few days, but trying to get back through the moving averages. Really just a lot of sideways action for the past few months. Like to see more strength in the transports, but for now, really not seeing it. Here is a way to visualize what's going on in small caps. This is a chart that shows you the relative performance of the small cap IWM. It's a small cap Russell 2000 ETF. The IWM relative to the SPY, which is the ETF that tracks the S&P 500. So it's small cap versus large cap. And look at where we were in August, double bottom. Since the beginning of August, we are moving straight up, and small caps right now are probably about an 8-month relative high versus the S&P 500. So I think this relative strength is just beginning. I think it's going to continue out throughout the fourth quarter into the beginning of 2026. We'll take it from there, but I'm expecting that we are going to see this continue. A couple of rate sensitive areas that really have been struggling of late. We did see a little bit of a rebound earlier this week. We've got the home builders here, which were struggling, dropping. 10-year Treasury yield actually threatening to move back down below 4%. So I'm expecting to see a nice recovery here, but we need to get through that declining 20-day moving average. We're not quite there yet. Rebound, though, has been nice. Another group, the asset managers, you can see moving back up and actually getting just above the 20-day moving average. And if I show you the hourly chart here, what we see is on this move down, I see a left shoulder, left side of the neckline, inverse head or reverse head, move back up, slightly higher right side of the neckline, so upsloping neckline, pull back into a right shoulder that is slightly higher than the left shoulder, and now we're moving back up. I think a breakout over 405 on asset managers will light a fire under this group, because not only will it look good here on the hourly chart, but if we go back to that daily chart, That breakout above 405, you can see the 50-day moving average sitting at 406. So if we get back through on through the 50-day and we do break out, this actually measures right here $25 up above 405, which would take us to 430, and that would be a new 52-week high. So I think this group's on the verge of sending a very bullish signal. And I think as rates come down and the market goes higher, I do like the asset managers group. All right, if you're new to earnings beats or you're been following us for a while and you haven't already done so, I'm not sure why you wouldn't, but scroll down, go to earnings beats, scroll down here, sign up with your name and email address. It is a free newsletter that comes out twice a week. Love to have you join. We've had tens of thousands of folks join us there. If you would like to try our paid service, we have a 30-day no-cost trial. You can click that green button on the screen when you go over to the website, and you will be able to access that. Let's see. Let's just keep moving on. Got a little bit more I want to show you. So about 4 months ago, I sent out to our members a list of my top 25 small cap stocks. Now, I can't give you the time frame here going back 4 months, but I can show you over the last 3 months. Look at what some of these stocks have done. IREN has gained 302%. And this is what I've been saying over the last few months. The IWM, if I'm right about the IWM and it goes to 300 and then the 350, there are going to be individual small cap stocks that are going to go up 5 times, maybe even 10 times. These stocks fly when they are in favor. We're already seeing some of that. Look at the last 3-month performance on the group of stocks that I gave 3 months ago. The IWM's only gone up about 10 or 12% since then. But look at what many of these individual stocks have done. Like I said, one of them going up over 300% in just the last 3 months. So I'm going to give you a list of 10. Actually, I'm going to give you a couple bonus stocks, but I'm going to give you a list of 10 small cap stocks that I think are really interesting right now. I'm going to go through them quickly. Some of these were on that same list from 3 or 4 months ago. Just because they've gone up doesn't mean I don't think they can go up further. I think many of these, you'll see most of these are in uptrends because I like stocks that are performing well. So they're already in uptrends, but I think they can go a lot higher. AORT, Artivian. I think after this move from a couple months ago, I think we're sideways consolidating. I expect we're going to break out and go significantly higher. And these are in alphabetical order, so I'm not really giving them to you in any kind of preference, just throwing them out there in alphabetical order. CALX Networks, another list I provided members a little over a week ago. I gave 10 stocks that I thought could make significant pre-earnings runs. This was one of them. It was just like I said, about a week ago that I put this out. This one's trying to get back up through its moving averages. I would not be surprised to see a quick run up to about 64 prior to earnings, and then maybe even break out before those earnings come out. But I do like CALX to go higher from here. CommScope, this one has been sideways consolidating for a while. When I gave the list out back in June, right in here, this stock was trading around $7. It immediately went up. This was the second best performer on that list I was just showing you. But I think it's just been consolidating, and I believe it's going to have another big run to the upside. Core Scientific just breaking out above the double top here just over the last few days. I think that run continues. Dave Inc., I see a little bit of an inverse head and shoulder off of this top, coming down into the shoulder. Here's the neckline. A little bit lower low, puts in the head, back up to the right side for the neckline, come down to the right shoulder. And I think we could just be making a move here heading toward earnings. This was another one of the 10 stocks that I gave to members saying, hey, I think this is one that could run heading into earnings. And you can see it already has started more than a 10% move in just the last week or so. FSS, big gap up here. We're back testing this gap support zone. I'm watching to get a breakout back above the 20-day. I think when we get that, I think this is a stock that could quickly make a run for 130 and ultimately break out and go much, much higher. GigaCloud Technology, GCT, I'm looking at what looks like maybe a little bit of a symmetrical triangle. Got a little bit of a trend line coming down, connecting the highs. You also have a little bit of an upslope connecting the lows. Watch for a breakout above about $29.5 to $30. I think that could really trigger this stock again to the upside. INDV, this is Indivior PLC or Indivior. I don't know, might be butchering the pronunciation here, but we did just break out again on Wednesday. I like that action there. Kodiak Sciences, this is a biotech. Be careful with the biotechs, but I do like this one if you're willing to take on some risk. Huge move up just recently. The stock went from 10 to 19 in 4 days, came all the way back down to 11, and I think it's just starting to run again. Biotechs are on fire right now. I think this is one that could have a big run in it. LASR, which is Enlight Inc., just made a breakout today. This is a stock in one of our portfolios. Love this recent consolidation and the breakout that occurred on Wednesday. Ouster, this is one that I actually gave in our live trading room at the beginning of October, down around 26. Actually, I think it was 27.40 and 27.45, something like that. But it was down near this support area. It has made a run here just over the last 2 weeks. It hit over 41 today. I think this one could absolutely fly to the upside. Certainly want to include that. Porch.com, PRCH. This is probably the one that's had the biggest problems of late, but I just think it's digesting massive gains that it had in the past. I think we're going to end up seeing this turn into a cup, and I think we're going to make another run back for that 19 area and ultimately break back out above that level. So this is a stock that certainly I'm interested in. And then finally, last one, Symbiotic, SYM, recently breaking out above this double top area around 63. Also, that's where your rising 20-day moving average comes in. Any kind of a drop back into that area, I think, would be very viable. All of these stocks, I will tell you, are very risky. They're small caps. Be careful. I am not a registered investment advisor. Earnings Beats is not a registered investment advisor. And so please consult with your own financial advisor before you take on any of these securities for purchase. Anyhow, with that, I am going to wrap things up. Certainly appreciate you tuning in. Next week could be a little bit dicey. Watch that volatility index. I think that's really going to be a key. If that thing starts to move up, you start seeing it 23, 24, 25, you're going to want to be very, very careful in the market in the near term. Longer term, I really like things going higher. Have a great day, everybody. Enjoy your week, and I'll see you next week. Happy trading.